Global markets are in turmoil in the wake of China's devaluation of its currency earlier in August. This is Steve Wiseman at the Peterson Institute for International Economics with Angel Ubide to try and figure out what's going on in the markets. Angel, today is Monday, August 24th, and the Dow went down precipitously, then went back up. By the time you're seeing this, maybe something else will happen. What do you think is going on, Angel?
I think markets are reacting to a big increase in uncertainty about the global economy that has been triggered by mostly by the actions of the Chinese authorities in the last couple of months. First, it was the reaction to the Chinese stock market decline. Then it was their sudden change in the framework for the currency. And this has created a cloud of uncertainty about the skill and the ability of the Chinese authorities to manage their economy. If China was supposed to be one of the pillars of the global economy and all of a sudden is in doubt, then I guess investors are reevaluating asset valuations and asset pricing, and what we are having is a sudden reprise of these valuations.
But there are other emerging markets that are in big trouble, like Brazil.
So this is coming on the heels of other, as you say, of mostly the BRICS, but also others, who are showing to the world that they have weaker fundamentals than we thought. Brazil, I think, is the perfect example. It's a country that was growing very fast over a period of 10, 12 years, that all of a sudden is now in the throes of a deep recession, a recession that is going to probably be quite long, with a policy framework that is also quite uncertain and quite unorthodox, and that is creating many doubts for global investors.
What impact is this going to have on the Federal Reserve's decision later this year on whether to raise interest rates?
This is always tricky, right? Because central banks are, in principle, supposed to look through short-term market volatilities and try to focus on medium-term fundamentals. Now, the decision, I think, in September was very finely balanced. There is, at least in my own personal opinion, there is very little inflationary pressure, very little argument to start raising rates. I read the FOMC as also being sort of a split, and with two groups that are quite balanced in their attitudes toward raising rates. I think at the margin, this puts the way towards inaction and waiting until the smoke clears and see what outlook we have once this stock market stabilization finally happens.
Are people panicking? And is this another case, though, of markets overshooting because they're trying to get ahead of a trend?
I think it's overshooting, but not because of panic. I mean, we need to understand how portfolios operate in these cases, right? You have a sudden change in uncertainty that increases volatility. Once volatility increases, measures of risk, what we call in markets value at risk, increase suddenly. So all of a sudden, your portfolio is riskier. Your risk manager comes to you and says you need to reduce your positions. This is happening for everybody at the same time. Everybody is reducing positions at the same time. It's not panicky, but it looks panicky. Because what you have, we have this say in markets that asset prices go up in the escalator and down on the elevator. And this is why, because all of a sudden everybody is sort of forced to shrink their portfolios at the same time.
So where are they putting their money if they're shrinking their portfolios?
Probably in cash, and wait for the storm to go away. And once the storm goes away, it stabilizes. We'll need to reevaluate what's the new outlook. What is the situation in China specifically?
Angel, thank you very much.
Thank you, Steve.